Hey, what's good, self-direct investors? I hope you're all doing great, and I want to welcome you back to my channel. If you're new here, my name is Jordan. I'm the mind behind Make More Capital, and today I'm coming at you with a midweek update in the world of cannabis. So before we jump in, if you enjoy this video or you learn something, please just leave a like on it as it really helps out my channel. Then of course, if you want to learn how to take advantage of this generational investment opportunity, subscribe below so that you don't miss any future videos. Then there's plenty of content for you to go back, rewatch, and educate yourself with. I've tried to put all the news and facts in one place so you can watch episodes over time to learn about how the industry has evolved, identify top companies that you keep seeing pop up, and then take advantage whenever you're ready. But we're going to start with some New Mexico news as officials file cannabis producer rules and will accept license applications this week. So within a week after hearing that New Jersey has finally gotten together the commission to decide on those rules and get that ball rolling slowly but surely, we have another state, New Mexico, that is getting the ball rolling as well. So that is very positive, as regulators on Tuesday released an initial set of rules for the adult use cannabis market as the state prepares to launch retail sales next year. And applications for producer licenses will start to be accepted within days. So adults 21 and older are currently able to possess up to 2 ounces of cannabis and grow up to 6 mature plants for personal use under a law that was enacted earlier this year, but officials must still develop regulations for the commercial market. So that is still to come. They took a key step to that end on Tuesday, and the rules for producers published in the New Mexico Register takes effect immediately. Perfect. So rules for retailers, testing facilities, and other cannabis sectors are still being developed and need to be finalized by January 1st, 2022, in advance of the launch of sales by April, which again is really only 8 months out from where we sit today. So it's not that far into the future. As a result of our open and collaborative process, these rules reflect the unique needs and perspectives of New Mexico residents, businesses, entrepreneurs, and communities, Regulation and Licensing Department Superintendent Linda Trujillo said in a press release. Plus, it's worth noting, most of the new regulations concern licensing requirements, public safety, patient access, and social equity. For example, the Cannabis Control Division said it will ensure that 50% of cannabis producer licensees will meet its social equity standards, supporting communities that have been impacted by the war on drugs. And as you can imagine, by April 22 next year, most likely, in order to get this online and rolling smoothly, SAFE will pass for all of these states that want to have social equity as a priority in their new adult use markets. We are ready for business, Trujillo said. The Cannabis Control Division is committed to supporting licensees to maximize the economic opportunities that adult use cannabis sales offers our state. So that's very positive. Seems like they're excited to get this rolling. Obviously, it takes time, but as more states do legalize and they get the ball rolling, that's very positive for cannabis overall. On to this article from Shepherd Express, the tax and budget benefits of legal cannabis sales. This is getting harder and harder to ignore as well, as the data is in and it's telling us what we've wanted to know all along. Legalizing cannabis can save hundreds of thousands of lives from being destroyed by the war on drugs every year. It helps disadvantaged communities heal. It helps achieve equity. It is safer and better controlled than street cannabis. It defangs organized crime. It provides an alternative to addictive opioids. But one argument rises over the rest in the land of unfettered capitalism. It is incredibly profitable, and that's very positive to add. In a large-scale study led by the Marijuana Policy Project, the organization compiled information from all 19 states that legalize recreational cannabis, as well as Washington, D.C. Due to the quickly increasing pace of legalization across the nation, 9 of these states reformed their cannabis laws in 2020 or 2021 alone, and in 8 of those states, tax collections have not yet begun. But I imagine that when politicians see the data, they're going to want this to start sooner than later, because cannabis revenues outpace alcohol. In 2018, alcohol brought in less than $7.5 billion in tax revenue in all 50 states, amounting to just 0.2 of the general revenue of $3.3 trillion. Despite the wide-ranging popularity of alcohol and its ubiquitous nature in the U.S., it is less profitable than legal cannabis, the study reveals. Let's take a look at some individual states. In Washington in 2018, all state-level alcohol taxes amounted to $370 million in revenue. That same year, the much less established recreational cannabis industry brought in $437 million. While Colorado received $47 million from alcohol, so clearly some states tax alcohol a lot more than others, the state earned $243 million from legal pot that year. That's huge. Not only does cannabis outpace alcohol despite alcohol being a more popular psychoactive substance, but the popularity of legal cannabis is quickly increasing, as can be seen in the 2 states where it has been commercialized the longest, Colorado and Washington. Now, if we look at some others, in terms of sudden growth, no states can compete with the 2 heavyweights of competition, California and Illinois. California, which benefits from a large population but a relatively light tax burden, has almost doubled its annual cannabis revenue each year, $397 million in 2018, $638 million in 2019, and more than $1 billion in 2020 alone. While Illinois started with comparable brio with $174 million in cannabis revenue during the first year of legal sales, a number which was nearly met in just the first few quarters of 2021, a year on pace to blow 2020's pot revenue out of the water. And so what is this money used for? This is very worth noting because obviously more tax money is good when it's reinvested into the right things like education and infrastructure. So far, Washington is the state that benefited the most from legal cannabis with nearly $2.6 billion in cannabis revenue. For every $1 billion in revenue collected from the cannabis sales, nearly $600 million is funneled into public health initiatives, including a fund that provides health insurance for low-income families, the study explains. A portion of the remainder is dedicated to funding education, research, and local budgets, in particular with the objective to support the state's low-income population. While in California, second biggest winner in dollar amounts with more than $2 billion in cannabis revenue, directs most of it to childcare services, seems very important, environmental programs, public safety, and to fund local nonprofit programs. While Colorado, the third biggest winner, focuses the bulk of its $1.5 billion cannabis dollars on education, where it should be spent. The money is divided between improving the state's public school system, offering cannabis scholarships, and a cannabis fund dedicated to public health, environment, public safety, and human services. So the data is in, folks. We can see that legalizing cannabis has nothing but positive benefits, and more importantly, it's profitable than other sin drugs like alcohol. So on top of that, though, it's worth noting California shattered cannabis tax revenue record in latest fiscal year, the state reports. California collected about $817 million in adult use cannabis tax revenue during the 2020-21 fiscal year, state officials estimated on Monday. That's 55% more than more cannabis earnings for state coffers than was generated in the prior fiscal year. 55% revenue tax growth is crazy. The nonpartisan legislative analyst's office said combined excise and cultivation tax revenue for the fourth quarter, which ended in June, amounted to $212 million, roughly tying the first quarter of the fiscal year for the most tax dollars raised in any single 3-month period since legal sales launched. New figures do not take into account additional regular sales tax generated from cannabis, nor do they include any local revenues to municipalities where the transactions take place. And remarkably, this trend of increased sales and tax revenue has been occurring amid the pandemic, which forced many businesses to close and contributed to rising unemployment. The cannabis marketplace also thrived in spite of the fact that cannabis businesses are ineligible for federal aid that was afforded to other industries. Now, obviously, it is very important that we have competent leaders in place that are able to allocate this tax revenue into the right things like education and infrastructure, school systems, healthcare, so that the money's used for good reasons. That is a whole nother issue, and that is obviously required. And sadly, we don't have a whole lot of competent leaders these days, it seems, but it's very positive to see that this money is coming in. So as long as there are some young people in there that are striving to become the next competent leaders, then they'll be able to allocate this properly and continue to show that states that reform their cannabis laws are the better places to live in the U.S. And then this was a very good visual from MSO Gang Vinny I wanted to share. You're not putting it back in the box, and this is absolutely true. A very good visual to see just how much change has happened over time since 1996. It's a constant fight. It does not end. But look at that. Pretty impressive. I'm going to let it play one more time. But to think it just started with a few individual states, from individuals on the ground working hard there, making this happen. Medical only, then adult use, boom, boom, boom. So if you think that the genie is going back in the bottle, I'm sorry, but you got to find a base in reality and get out of Delusionville a little bit, because this is happening, and better to get in before and wait, as time in the market always beats timing the market. On to this one from Todd Harrison. He provides an outlook by Needham on cannabis, so thank you, Todd. On U.S. cannabis, this is very great to read because it just highlights everything that I've been saying. The U.S. cannabis industry is on pace to grow a projected 33 to 40% in 2021. We had assumed that this growth rate would be 20 to 25% earlier in 2021, but growth in California, Colorado, Illinois, and Florida is exceeding our prior forecast. We expect MSO revenue to grow 95% plus, for gross margins to be sustained at 55%, and for EBITDA rate to be greater than 30%. While we consider those metrics exceptional for any industry, we find them extraordinary for a sub-industry in the consumer space. While the cost of capital remains high for MSOs, with the $2 billion raised in debt and equity in late 2020 and 2021, balance sheets are generally in good shape. So gross CapEx, which is capital expenditures, increased this year, and we expect the industry to sustain this spend into 2022, and we expect the wave of M&A that began in the first half of 2021 to continue as MSOs seek to expand into new states or add in existing ones. But just to highlight, while we consider these metrics exceptional for any sub-industry, we find them extraordinary for a sub-industry in the consumer space, especially an emerging market in the US, I would imagine. So wanted to add that because this does add what investment firms like Needham view this opportunity as very unique, and because all of these moving parts and factors sort of continue to take time, but they line up for us, that's very positive. So we do anticipate more growth coming. Well, this one comes from Toby Cannabis, so thank you, Toby, for sharing this. Which MSO's charts should you be looking at? Needham shows top MSO revenue up and to the right. Stock prices are the other way. This is what I call a huge opportunity, as I do as well, because I have read enough Warren Buffett to know that when things don't make sense, there are cents to be made. Special mention to Curaleaf for not only having the largest revenue base, but growing 20% quarter over quarter. Adding $50 million of revenue in a quarter is quite an accomplishment. That is 100% true. If we take a look, revenue quarterly, charts show revenue as reported in USD and sequential revenue growth rates. We've got Curaleaf, Green Thumb, Cresco, Trulieve, Verano. It's just worth highlighting that these Tier 1 MSOs are just really, not to say light years ahead of the Tier 2 ones, but these ones are just more of the safe bets. And as we've seen, the prices continue to fall. So you're getting them at a great margin of safety if you've been able to accumulate over the last month, because just based on how much they've fallen, based on the growth that they're going to see in the future and how well their fundamentals are performing, they've fallen enough that it gives them a margin of safety that there's a lot less likely odds, it's less likely for them to fall any lower than they already are, and the odds of them going up just based on all of the upcoming catalysts and the growth and the fundamentals that we're seeing, just much higher. And so I encourage you to think for yourself, but also do some digging. Which U.S. industries do you see quarterly revenue growth grow at least 15 to 20% quarter over quarter? But more importantly, some quarters, Curaleaf, 55%. Cresco Labs, this was Q3 after Q2 last year, 63% quarter over quarter growth. 64% from Verano out of the last quarter. Main thing to see 15 to 20% on average is great, but then to see some of those big number jumps, that just shows how the total addressable market will continue to expand in this industry. And then we've got some of the Tier 1 MSOs down here, but Air's recent performance makes them look even more attractive at their price as well. So lots of good to highlight here. But yeah, this is hard to find in any growth industry, I imagine, especially in the US. While this is another one from Sammy J. To my delight, Needham's best in biz analyst also included a Q2 cash flow from operations graph this morning in his recap of the Big 10 MSOs, and he adds, notice the divergence of this cash flow from operations graph to the EBITDA one, supporting the point that EBITDA is not a proxy to cash flow in this sector. And so from my understanding, what I think he means by that is that typically EBITDA is a marker of profitability, because earnings before interest, taxes, depreciation, amortization, earnings is technically profits when we talk about it. But the whole point saying is that EBITDA is not necessarily a reflection of cash flow in this sector. And then it's just worth adding, important to note the big swings you see in cash flow from operations from quarter to quarter in the sector are largely due to 280E, often being accrued for a couple of quarters and then paid down in a single quarter. So that's why some companies will show more cash flow from operations in certain quarters, but then they'll have one quarter where there's a lot less because they likely paid their 280E during that time. This is why the trailing 12 month is important to smooth the inflated quarters where 280E isn't paid with the pay down quarters. And so even if you're not a technical investor, these are just great visuals to help us see the cash flow from operations consistently quarter over quarter and EBITDA growth quarter over quarter. But as we can see, most of these MSOs are bringing in cash flow from operations consistently in some quarters, and then as we can see the drawdown here, where they do not have positive cash flow from operations, that's likely where they're paying their 280E tax in one chunk, as opposed to doing it every single quarter. So that's really worth knowing. And then note down here, companies that report under IFRS will generally have slightly higher cash flow from operations, as operating lease expense is reported in cash flow from operations under generally accepted accounting principles, but under cash flow from financing under IFRS. Cresco, Trulieve, and Air changed reporting convention from IFRS to GAAP in Q4 of 2020 or first quarter of 2021, but did not provide restated cash flow statements for the prior year until the current year quarter is reported. So there's some mixing of IFRS and GAAP that makes their quarterly CFO only directionally comparable, so that's obviously confusing. And while it is annoying that there's the discrepancy between IFRS and generally accepted accounting principles, this visual does just give us another angle at which companies are a lot more healthy and actually bringing in cash flow from their operations and creating money from nothing, as opposed to companies that are continuously raising more equity and getting into debt. And just as we can see, like Columbia Care, as a smaller MSO and working so heavily on expanding, they're yet to return any cash flow from operations, versus the tier 1 MSOs are, either consistently there or getting there. And obviously the removal of 280E is going to be massive for that. But then if we move over to the EBITDA quarterly growth, adjusted EBITDA, again, how many industries in the US do you see consistent EBITDA growth quarter over quarter, especially into the 20, 30, 40, 50% range? So it's very impressive, but just note as well, it's funny, adjusted EBITDA does not have a standard definition. And some companies are more generous in the adjustments than others. So yeah, this is at the discrepancy of the chief financial officer of these companies, so it's worth noting. That's why I don't think people take EBITDA as seriously. Adjusted EBITDA has sort of become the alternative to profit these days, whereas typically you'd look at earnings per share in the past, and especially with these high growth industries. But yeah, anyways, these are two visuals that just basically give us another way of looking at the same story. And then lastly, Sammy J also has this public U.S. cannabis operators peer comp table highlighting the most important metric for successful investing: cash flow from operations. Are the company's operations creating something from nothing, cash, by spending less than they are eventually bringing in over time? And what this also highlights is market caps compared to enterprise value through August 20th. So I want to highlight that according to this comp sheet, public U.S. cannabis operators cash flow comparable table, the cash flow from operations trailing 12-month, $1 million US. The company in the lead is Verano, which has brought in $100.3 million in cash flow from operations. Then we have Green Thumb Industries with $84 million cash flow from operations, and then Trulieve with $71.2 million in cash flow from operations. So these are the top three. Obviously, you can see as the list goes down, and if you want to grab this link, you can get it below. But just wanted to show you as well, if we just jump over to the side, we see free cash flow. So after they've used this cash flow from operations to pay off any expenses, then free cash flow is what they have left over. So obviously this is less because, again, these are fast growing companies in an emerging growth market. So they're not maturing yet, but obviously the first companies to get to maturity and profitability, that's very positive. So that's what we're looking out for. So main thing though, some of the main tier 1 MSOs are up here. As you can notice, Curaleaf's at the bottom, but that is the price of them paying to be the biggest and going so big. They are expanding and that costs money. So as you can see, they have a negative 88.6 down here, but main thing is like Boris is a billionaire. He could cover that himself if he wanted. And this just highlights how much more effective these US MSOs are with their capital as opposed to a lot of the Canadian operators like Canopy or Aurora that were losing hundreds of millions of dollars quarter over quarter. But lastly, I just want to bring your attention to the equity value, which is another word for market cap, what the market believes these companies to be worth today. So this is what their market cap, or this is reflective of their share price. Again, though, as of August 20th, not today. And what's nice is that we've seen some green days in a row, which has been very rare. But then we compare to their enterprise value or book value. If the company sold all of its assets and liabilities, what it would have left over, and if you had this amount of cash that you could maybe buy them outright. Now, obviously, these companies would be like, no, there's a lot of growth that's not factored into our current market cap, so you got to pay a premium, and that would be totally fair. But this just goes to show that, the lower that the market cap falls compared to the book value, the greater margin of safety you can see in these companies. Because, if Verano is worth just under 4 billion or 3.9 billion, yet their market cap's putting them at 3.7 billion, like the lower their market cap falls, the greater the margin of safety becomes. And I've just used that a lot, margin of safety, so hopefully this just gives you a better idea of what that is, right? So for example, if Cresco Labs is 4.1 billion right now, their enterprise value, if their equity value were to fall to 3 billion, like if their market cap were to continue falling and their share price, trading at under $9 USD, putting them at a market cap of 3 billion, yet their enterprise value is 4 billion, that'd be like a 25% margin of safety. So chances are, if you're buying Cresco, when it falls to that point, there's a very good chance it's not going to fall any lower, and a very good chance that it's more likely to go up than fall any lower, especially based on fundamentals though. That's why when we look at margin of safety and we compare the equity value to enterprise value, the fundamentals have to be good in order for us to believe that the company has potential to grow in the future. So sorry if that was rambling, but just trying to share what I know as well and educate at the same time, showing you guys visuals that will help you also. So if you want to grab this link, it is below. On to some news from MSOs as Air Wellness adds to Florida retail footprint, opens new dispensary in Boynton, Ohio. So they've announced today the opening of Liberty Health Sciences, Boynton Beach, the company's 40th operating dispensary in Florida. So as we can see, week after week, Air Wellness just continues to open stores. While this 1,600 square foot dispensary sits within a a shopping center with approximately 60 parking spaces and is a 10-minute drive from some of South Florida's most popular beaches. So it's worth noting the Florida medical cannabis market continues to show robust growth, with the Florida Office of Medical Cannabis Use reporting over 597,000 registered patients as of Sunday, which I reported over 600,000 as of August 6, 2021. So that's more accurate, up 51% year over year. So do not sleep on Florida. The medical market is growing, and I just cannot wait for that adult use market to open up. While we have this one from Business Journals, now this one is behind a paywall, so unfortunately I can't open it, but cannabis processor moving forward on 40 million expansion near Dayton. Now I know Dayton is in Ohio, and I've covered this a few months back, I think, that there was a company that was aiming to expand capital expenditures and build out more infrastructure in Dayton, Ohio, before Ohio plans to legalize for adult use. Now, just wanted to highlight in this article, topic is cannabis, the company is Cresco. So as a Cresco shareholder, that obviously makes me very happy. As a Chicago-based medical cannabis business is investing $40 million to expand its cultivation and processing facility in Greene County, and I do believe obviously spending the money now to expand this facility for when Ohio does end up legalizing for adult or reforming for adult use on top of medical. I think this is very good. But main thing we can get out of here, the project aims to create more than 140 new jobs within the next 5 years. But all that said is just that this is Cresco moving forward with expansion in Ohio, which is very timely, as in the past few weeks I've been covering that Ohio activists have gotten adult use legalization on the ballot for 2022, so it seems like Cresco is preparing ahead of time for that. While in Idaho, the Supreme Court gives 2022 cannabis legalization initiative a boost with ruling on signature requirements. So it's a breath of fresh air as Idaho marijuana activists are breathing a sigh of relief after the state Supreme Court on Monday ruled that a law creating a more restrictive petitioning process for ballot initiatives is unconstitutional. So that's very positive. The governor signed a bill in April that made it so petitioners would have had to collect signatures from at least 6% of registered voters in all 35 of Idaho's legislative districts, rather than 18 districts under provisional rules in order to qualify for a ballot. So how ridiculous is that? This is the governor signing a bill to make it harder for people to legalize cannabis, and thankfully the Supreme Court of Idaho struck that down. That would have significantly strained a campaign to place the cannabis legalization initiative, the Personal Adult Cannabis Decriminalization Act, before voters in 2022. So a separate medical cannabis legalization measure that activists are pushing was unaffected by the policy change because petitioners started collecting signatures earlier and were grandfathered into the original 18 district requirement, which is great for the medical initiative. And then in any case, the court unanimously declared the law, which took effect July 1st, signed recently by the governor. So I imagine this was a play to try and slow the adult use legalization effect down a little bit, unconstitutionally infringed on residents' right to petition. So this is very positive, highlighting that the Supreme Court is standing for the people, as opposed to governors that are trying to put things in place that might slow down progress. But on top of that, just another example, Texas's ban on smokable hemp manufacturing and sale is unconstitutional, a judge ruled. So this is great, though, because this is 2 stories in a row where it's victory for the people as opposed to ever-expanding bureaucratic government. So this is very positive, folks. We still have power as long as you fight for it. Texas's ban on the production and sale of smokable hemp product is unconstitutional, a state district court declared on Monday. In a major victory for the state's hemp industry, Judge Laura Livingston of the 261st District Court ruled in favor of plaintiffs, a group of hemp businesses who sued the Texas Department of State Health Services over a ban on the manufacturing and selling of smokable cannabis products imposed after the crop was legalized in 2019. Livingston said in a decision letter that judgment is granted in favor of the plaintiffs without the need for further evidence or hearings. That means a series of Texas statutes prohibiting hemp manufacturing and sales will be fully invalidated after counsel submits final judgments for her to sign. We're pleased with the result. The law never made any sense. It was an unjustifiable infringement of liberty when enacted and would have seriously hurt the Texas hemp industry from farmers and consumers to consumers if allowed to move forward. Matt Zorn, one of the lead attorneys on the case, told Cannabis Moment. After a full trial, the court saw things our way and declared the statute unconstitutional under the Texas Constitution. So again, this is a big win for humanity and people, highlighting that if you want to fight for something, you got to get on the ground, take action, and do it, and you can make a difference. While this last one coming from New Cannabis Ventures and Alan Brockstein, 5 takeaways from cannabis earnings season. So let's go through it, friends. With just a few more companies releasing numbers before the end of the Q2 financial reporting period, it's very clear that the American cannabis industry is making tremendous progress with a bright outlook. While the prices of most cannabis stocks have declined in the past 2 weeks, we think that the reasons have little to do with what was reported so far. Here are our takeaways from what we've seen and heard. Softening demand did not impact results. One of our fears heading into earnings season was that the recently reported data showing a slow of cannabis sales across many state markets would outweigh on results for MSOs, but that was far from the case. We remind readers that revenue growth depends only partially on growth in the overall market. MSOs are growing through expansion within existing markets of operation by adding capacity in new stores and into new markets, as well as through consolidation or mergers and acquisitions. While any sort of slowing in the market is likely to be short-lived as we cycle through the comparisons to extremely robust sales in the summer a year ago, we were concerned that investors would react negatively had there been sales shortfalls due to slowing demand. And although the share prices did fall a little bit from impatient investors likely selling, it's worth noting that the fundamentals and the sales these companies saw were very strong despite the sort of soft or slowing growth in cannabis sales in states heading into the summer that we saw. While cannabis companies learned the value of being conservative with guidance, most MSOs and ancillary companies exceeded expectations, reflecting a better than expected near-term environment, but very few were willing to raise their outlook for the balance of the year. We think this failure to raise guidance is likely one of the biggest perceived negatives from earnings season. Often when a company beats expectations but holds its outlook, it is seen as a shift of revenue forward from later periods. This isn't the case here though. Several companies, when pushed by analysts, sounded like they were just being conservative, which makes sense to us for several reasons. First, with prices already generally lower than a quarter ago, there's no need to be aggressive. Second, and more importantly, there are some factors that suggest caution, including the slower than expected rollout of flower in New York and getting final rules for New Jersey, and also construction delays. Another factor is the uncertainty of how the Delta variant could impact operations, but obviously the pandemic hasn't really had any issues in the past, and these companies are taking all precautions to ensure that. So chances are that will be fine going forward. But it's better to be conservative and have the earnings, blow it out of the water than to aim too high and not end up meeting those expectations. Thirdly, state programs expansions are moving ahead slowly but surely. Those who have followed the development of the cannabis industry understand how slow rollouts are the norm, and there's a lot of discussion on the conference calls regarding the timing of first adult use sales in New Jersey and New York. On the latter, most companies now think the first legal sales won't take place until 2023. Another important issue in New York is the timing of flower sales being permitted under the existing medical program. Finally, with Illinois just recently awarding additional dispensary licenses, analysts inquired about how the operators in the market were thinking about the timing of those stores opening. These programs will fuel tremendous growth in the future, but the slight push out of timing for first sales is perhaps a near-term negative. So more importantly, this is why you have to have your own plan and plan for your circumstances. So make sure you are bringing in cash regardless and saving so that you don't necessarily have to sell your positions in these investments. Debt costs are declining. Several companies pointed to falling debt costs on their conference calls. In Cresco Labs, for example, unveiled a new facility that boosted the size of the debt, lowered the interest 9.5% without warrants, and extended the term to 5 years. Given the build-outs ahead for new markets, access to capital will be very important. The availability of debt on more attractive terms is a positive dynamic, and I believe the terms will become more attractive in time as access to capital gets even easier and more cost-effective, while M&A remains top of mind. At the onset of the year, we shared our view that mergers and acquisitions would be a big story in 2021, and this has certainly been the case. Based on the conference calls we heard, we are still expecting continued consolidation by the leading MSOs. Again, our expectation is that most of these deals will be an acquisition of private single-state operators. Despite the negative reaction of most stocks to earnings reports, we don't think the reports in most cases were a cause of the selling. The cannabis sector continues to suffer from the technical dynamic of stocks overshooting early in the year. The financial reports were generally good, but there wasn't anything that would necessarily pull in new buyers, and it seems as if some investors and traders are pulling the plug on positions that have now been declining for over 6 months. So it's worth noting that it just depends, again, on your plan and what you're holding out for. And that speaks to anyone trying to make a quick buck in this industry, which you end up finding out is not that easy. So this last sentence is the best way to end this off. We remain encouraged by the underlying fundamentals and expect the sector to capitalize for years to come on the proliferation of new markets opening for adult use. And that is where we sit. And remember that time is on your side as long as you are preparing for the catalyst to come. And I think safe banking is going to be the big re-rating. But I do think into the fall, we will see momentum pick back up, as that's typically been the cycle for this industry. It's just better to make a plan and plan ahead, and better to be in the market. Time spent in the market is always better than trying to time the market, because you never know when that trend is going to change. And that is it for today's episode, folks. I want to thank you so much for tuning in, and I really hope you got some value out of it. What did you think of the stories mentioned? Let me know in the comments if you have any questions or concerns, and I'll be happy to address them. Besides that, if you enjoyed this video, please leave a like on it. Subscribe if you don't want to miss any future videos, and I will catch you on Sunday for This Week in Cannabis News. Have a great day, everybody.